This is Eric Brotman, the host of Don't Retire, Graduate, the podcast that teaches you how to advance into retirement rather than retreating. And this is Office Hours, where we answer questions that listeners just like you send in. We received a question from Timothy, who asked, should someone in their mid-30s contribute to a Roth 401k versus the traditional 401k, even if they are in a high tax bracket? Timothy, that's a very tough question to answer, but I will do my best. The purpose of a Roth versus a traditional 401k or IRA or other types of accounts is really to try and time and or game when you're going to recognize various taxes. So when contributing to a traditional account, the idea is that you take a tax deduction, typically, for your contribution, and you want to do that when you're in a higher tax bracket. You get tax deferral, and then when you're older and you start to pull money out of the account, the premise is that that's when you'll pay the taxes because you're in a lower bracket than you are today. So if you're in your 30s and you're not going to touch your 401k for, say, 30 years when you're in your 60s, what you're assuming by doing the traditional 401k is you're assuming that your taxes are higher today than they will be down the road and that you need the deduction now. If you're in a high tax bracket today, it means that you have reasonably high income now. And while that usually means that a tax deduction is helpful, the real question is, what does your wealth building journey look like? If you're planning to have more money and more income in retirement than you do today because you've amassed some wealth, then arguably the traditional 401k is just going to compound your taxes later. And in that case, a Roth 401k or a Roth IRA might still make sense for you as long as you're within the limits and you're allowed to contribute. And of course, with the Roth 401k, if that's offered by your company, there are no income limits. So anyone can contribute to the Roth 401k. The challenge with that is we don't know what the legislature is going to do, not only at the federal level, but at state and local levels between now and, say, 30 years from now. So if you asked me in 2050, what do you think the tax rates are going to be in the United States or in the state of XYZ? I would tell you, I think tax rates are going to be a lot higher down the road, partly because the government at all different levels is running deficits and is largely broke, partly because the cost of aging is so high in this country, and as people live longer, their costs go up, medical costs go up, and so that creates potentially a need for additional government revenues in the form of taxation. So I don't think we're going to see a tax regime much friendlier than the one we're in currently. So from that standpoint, the Roth 401k makes sense at almost any income level if you're a young person. And by young, I mean 20s and 30s. And no offense to my fellow 40-year-olds, but we're sort of at that midpoint where you really have to think about, does it make sense to contribute to a Roth or to a traditional? A lot of times folks between 45 and 60 are in their highest earning years, and that's when the traditional 401k or IRA make the most sense, because that's when you need the tax deduction the most, and you have fewer years to grow the money and fewer years to wonder about what tax rates might look like. So, Timothy, I know this was a tough one to answer, and the question is so it's so rich that, quite frankly, there's no answer other than maybe. And really, your personal situation is going to matter. It really has to do with your net worth. Are you anticipating an inheritance? Are you anticipating sudden wealth in the form of the sale of a business or some other asset, which would predictably make your taxes higher down the road? In which case, the Roth makes a lot of sense. If that's not the case, and you're in your 30s and you're in a relatively high tax bracket, typically making the traditional 401k contribution still makes sense because you need the tax deduction. We're getting clobbered in every different way, and that's one of the things that can make a difference. So, Timothy, thanks for your question. If you have a question you'd like me to answer during office hours, follow Don't Retire, Graduate on Facebook and post your question or tweet us at Brotman Planning. Thanks for coming to office hours. Be sure to tune in for new content every Thursday. For now, this is your host, Eric Brotman, reminding you, don't retire, graduate.
Securities offered through Kestra Investment Services, LLC. Kestra IS. Member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS. An affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.